So let's have a conversation about setting rules. Now, this was something that came up in one of my mentee meetings, and I definitely want to go really quickly over 5 of my rules that I have. Now, I can set rules for you, and I can't tell you what your rules should be. Your rules will come out of your experience, whether it's wins or whether it's losses, okay? You set your rules based on what you experience on the market, because you know what works for you and you know what doesn't work for you, and you know where you may mess up the most. I'm going to go to my trade journal, and at the beginning you have what are your rules, and you're able to list 5 rules. Now you can place your rules wherever, because you can have more than 5 rules. You can have 1, maybe you have 3. However you do it is up to you, and how many you have or need is also completely up to you. Now, one of my rules that I have is that I will cut my losses at 30% on short-term trades. Cutting my losses at 30% is just basically saying that if I lose 30% of my trade, or the value of my option is down by 30%, I'm going to cut my losses on that trade, and I'm going to keep it moving. Now, I said short term because when you are in a longer term trade, there have been times I've been down 50%, 60%, but because I was confident in what this trade was going to do, I wrote it out, and usually it goes back up and hits my targets, and then I come out of that play a winning trade. Okay, so a lot of times when I have a longer term trade, if by a certain period of time and I'm still down, I would then cut my losses. But if I'm in a trade that doesn't expire for a month, 2 months, 3 months, I'm not cutting my losses at 30%, because a lot can happen in 2 weeks. So a lot can definitely happen in 2, 3, 6 months time. Okay, so I don't cut my losses at 30% on long term, but if I do decide to sit and day trade, 30% down, I likely may be cutting, especially if the charts is telling me that it's completely going to go against me from here, and there's no sense in losing more money. My second one that I have is that I will not trade without a clear setup or a plan. If you have been following me, you'll know that I have been doing a lot of swing trade planning, and I have to see a clear setup. If you look at the trade that we did with Intel, the one with Klarna, and a number of others, you will know that there is a very, very clear setup that is giving me confidence in this trade, and every single time they've played out. The Intel trade had a bull pennant. Klarna had a bear pennant, or you may look at it as a bear flag. There was a clear setup to tell me, okay, I have a sense of direction of where this thing is going to go and what it's going to do. They were on a daily time frame, so my plan was long term. I stuck to it, and they played out perfectly both times. But let me say this real quickly. Sometimes, even when you see the perfect setup, it won't always be a winner, because patterns and setups can be invalidated. So a lot of times they are a winner, but sometimes it could go against you. My third one, I will not ignore my targets or my exits in my plan. If I set a specific target for this is going to be my entry for my trade, and this is going to be my target, I'm going to stick to my target, because I see it done pushed all the way up to my target, and I say, okay, it might can keep going. Maybe I should hold on to these contracts, or hold on to this contract and see what it does. Big mistake. A lot of times I set that target for a reason. Likely it was a resistance level. So just because it rallied up $10, maybe it hit my target, doesn't mean it's going to keep going. Remember, these levels are there for a reason, because it tells us what took place in the past. Yes, it does have the ability to break it, but it may not break it immediately. I decide I'm going to stay in that trade, that thing reversed on me, and now all of this profit that I had is either gone or it's cut in half, simply because I did not stick to my rule and exit at my target. Now, this is an important one. I will not trade after a major loss. If you are new to the game, especially if you are someone who is extremely emotional with your paper, you know that if you lose a trade, you're going to try to jump back in another trade, and you're revenge trading, and you're trading off the emotion of losing whatever amount of money you put in, and now you're still losing again because you just jumped into something prematurely, simply off the fact that you're upset about a loss. If I have a major loss, I am not interested in getting into any more trades. If I have some that's already open, let them do its thing, leave those charts alone, because I made the emotion. I'm happy that I'm now at the point where I do not get emotional about my losses. Losses losses happen. This is the game of trading. We won't win them all. You're going to win some and you're going to lose some. And the quicker we get into that mindset, the better we will be in our trade. And the fifth one is I will never risk 100% of my account. I don't care how good a trade looks. I know sometimes this whole game is about risking a little money or just risking it to make more money. Yes, but the next part of that is we want to be in the game as long as possible. So therefore, risking your entire account on one trade is not a good idea. Okay, because what happens is even if that trade goes up, okay, cool, perfect. But what if it goes against you? And what if you're someone who don't know how to get out of your trades, who don't know how to cut your losses, who isn't good at risk management, and you put $500 into a trade, but you don't exit until you realize, oh, I've lost 70% of my money. So when you finally close it, you're down $50, $100 or so dollars, and it's just like, okay, now that's all I got from 500 simply because you risked everything on one trade. Managing your risk is going to be super, super important. Staying in the game as long as possible is the whole point of trading. Okay, we don't want to blow our account, so set an amount for yourself. Me personally, I don't risk more than 50% of my account. So if I got $1,000 in there, I'm not risking more than $500 on open trades, whether it's one or multiple. Okay, I got $10,000 in there, I'm not risking more than $5,000 on trades, and a lot of times I won't even go over that. But hey, you gotta have a set amount for yourself. If you got $100 in your account, you need to be finding something lower risk to be able to step into. And before you say $100, you can most definitely trade with $100 or less. But of course, it takes a little bit more efficient to find something worth doing. Those are 5 of my trading rules that I have. You can take those and you can apply it where you need it, but the best rules that you set are the ones that come out of your experience as a trader. I hope my rules help. I hope that gives you that, wake up call to say it's time for me to write down some rules for myself, because it keeps you in check with how you're entering those charts, and make sure you're not entering them prematurely and just doing stuff, because that's when you're blowing your paper, and that will make you, unfortunately, a horrible trader. So with that, I will see you guys in the next one.